Watchlist time for Monday, August 5th, start of a new week. So kind of the trend that's been happening here with SPY pulling in is kind of dragging a bunch of names with it, adding to the fear index, stuff like VIX, starting to go crazy. So people are afraid. Serve, what was happening like over here when stuff would push, pull and consolidate. Its next leg was favoring the upside as people were still in the chasers market. And then what happens here on its pull and consolidation is it sets a lower high and starts to break down. So I'd be looking for a failed follow through on a bunch of names, kind of with this similar setup, verse 15. If that thing continues to fail to follow through, CMAX doing the same thing, trending the same way. PSNL is an outlier kind of holding up here. If it continues to build over the 350s, could have that 420 break, 450 break down the line. Lumen is kind of in this upper channel, not as clean of a fader as I would have liked, but just going to keep on radar just because it's a big percent gainer. Big enough panics I'd look to dip by, but a bit too choppy now on the backside for me to join. ISPO was had those wicks I was looking to join a trend if it started to build over 8, and was all failed fall through momentum and completely died, so I'll be taking that one off watch list. RDHL came in quite a bit here into the close. Possible liquidity trap over 75 set price alerts, and I'll keep that one just on a side chart. TWOU, similar kind of thing, possible liquidity trap being saved. It's going to be delisted on August 7th, I believe it was, but it looks like everybody's kind of positioned for it, and wicks are getting absorbed. So if this thing breaks over this lower high trend line, I think could catch shorts off guard for a short-term breakout. PMAC, possible liquidity trap, going to put that in the same boat as Red Hill. Wicks on the top side and needs to get over this $90 to $1 range for the breakout to really be on, but I'll still keep it on radar. Drama, I had traded that parabolic there was my plan into this 330s 340s range, which was this day's closing VWAP. I expected it to fail. We only got a 30-cent pull, and it continued to grind and go sideways the rest of the day, so it didn't really amount to much. News, now that it's gone here from the 2s to the 8s, pulled back sub 4. If this thing can stabilize off the open, potential opening range high day breaks for a bounce back into the 5s before fading off. Similar to like something like this where it fades off, you get that little bounce, and then it's going to roll over. Be looking for something like that. Let it fade off, put in a lower high, and then let it trickle off big picture. But it's into this big consolidation range. Looking at the volume profile, could have a potential short-term bounce here before heading lower. Zap, this thing hasn't gone off my radar, but if this builds below prior day's lows under this $8.80, $9 range, I think we get a nice clean possible multi-day fade there. And Clask gave up this big picture trend line sub 15 with Bitcoin pulling back like crazy over the weekend. If this thing gaps down too much, I won't really trade it. But if this is pops towards 15, start to fail, I think that could head lower. So yeah, with Serve kind of breaking down, looking for this Zap to start breaking down, but this is kind of the pattern that's been working right now, where backside of these multi-day runners that have a bunch of resistance and bag holders put in have been able to break prior support levels and make new lows. So those will be my main watches going into tomorrow, and possibly some gappers, see where the markets are big picture wise. It doesn't look very pretty. Some Middle East headlines, some headlines of big investors like Buffett exiting a bunch of positions, holding cash, and price action as well as an indicator showing a lot of heaviness and some fear in VIX and things like that. So I think it's worth it to be careful, but I will trade those plans I listed tomorrow, and likely more in the morning. I'll see you guys in the room.